Over the past few decades, the top 1% have added trillions of dollars to their net worth, not by working harder or working more hours, but simply by owning assets. Capital begets capital. Meanwhile, the bottom 50% of the country owns almost no equities, no real estate. They have no meaningful stake in the US economy. Their share of US wealth has remained relatively stagnant and even saw periods of decline, and by many different measures, it's actively shrinking. Now, if you're a curious mind, you want to know, why is this happening? The answer is because we live in the age of financialization. The economy doesn't run on making things, not anymore. Instead, it's built on trading things that represent real things: stocks, derivatives, debt instruments, layer upon layer of abstraction that make the rich richer. Now, the reductionist stance on this is that it's simply about greed, but it's not just about greed, it's about survival for the elite. The corporate elite, the military industrial complex, Wall Street, even the baby boomers need this system to keep expanding. If it stops growing, it collapses. Ben Bernanke told us that they were going to do this in 2008. This house of cards requires inflation in assets, not wages. So if you're not investing in the stock market, in index funds and ETFs and tech giants, Microsoft, Nvidia, Apple, Meta, etc., then you're not even on the playing field. You're watching the game from the side while your purchasing power evaporates. The cruel truth: you don't have to beat the system. You just have to understand it well enough to not get buried by it. Remember, the market doesn't reward effort, it rewards ownership. And the longer that you wait to start owning something, the more you become owned.